Hi, good day to all. This is Kelvin here. Welcome to Module 12, Trading Psychology of Trade the Markets Like a Pro, a series of education videos. So in today, I'll be sharing with you all what is trading psychology and why is it important to become to be a successful trader. So right now, before we start, let's take a look at the disclaimer slides first. All right. So I would like to view the whole trading process like a inverted pyramid of trading hierarchy. What matter most in successful trading? All right. So the one that has a higher area, patient and controlling emotion, in fact, forms a greater percentage share of our time in order for us to be a successful trader. All right. As comparison to methods. Okay, methods, it could be quantitative analysis, it could be fundamental, or it could be a mix of both technical, quantitative, and fundamental analysis. So a lot of us, as a start, we believe that in order to find that holy grail in certain methods, will able us to become successful trader. That means, i.e., to be have more winnings trade versus losing trade, and totally ignore risk management and as well as controlling our emotion and patience. So basically, the whole bulk of patience and controlling emotions form part of this trading psychology module that I'd like to share with you all. So what consists of patience and controlling of emotion? Basically, it's actually waiting patiently for our trades to set up. That means, i.e., we will have a certain parameter to say that, hey, there is some trading strategy that I share with you all in module 1 to 9. I got to wait patiently for the signal to appear before I execute the trade. All right. And also, I also need to understand avoiding revenge trading. As you know, I share with you all in the risk management portion, there are bound to be period of consecutive losses. So once we hit certain consecutive losses, we need to stick to our trading discipline. That means, let's say we have a fixed percentage risk of capital that we got to stick to in our trading system. We should not be adding on more risk to actually to be eager of recouping back our losses. So this will to prevent us for the risk of ruin and also protecting emotional capital. So later I'll share with you what is emotional capital next. Then risk management is actually basically position sizing, trade management, identifying good reward or reasonable reward risk ratio trading setup, and also the usage of leverage, decent amount of leverage, and so understanding correlation analysis. So these are actually covered in module 10 to 11. Then the methods which I share will be entries, exit, and selection of markets. All these I covered the principles, or I will say that the practical approach of using technical analysis to source for trading setup. So that could be found in module 1 to 9. All right. So now let's jump into this bit of portion of patient and controlling of emotions. So emotion orientation and financial boundaries. So as we know that we traders we live to compete and wants to be always right in their trades. So it tends to leave a bit of emotional disorientation. So how do we disassociate ourselves from emotional disorientation is because to understand this. Winning is just part of the equation. Okay, just only part of the equation. A successful trader needs to know how to manage risk as well. That means we've got to take into the equation that hey, certain part of our trading journey they'll be bound to have losses. It's not all consecutive winning along the way. And also we also got to understand that by understanding this that there's period of time where we may start to see consecutive losses. To understand that trading is equals to risk taking. It's a risk taking game. And also being a risk taking game, we got to set a risk capital that we are prepared to lose. That means, i.e., we need to set a maximum risk capital. That means, out of how many trades, we got to say, hey, we got to put a stop to it. Let's say our risk capital for us is 10K. Okay, once we hit 10K loss, we got to put a stop to trading and reflect. And this capital amount of losses will not affect our desired lifestyle. That means, for example, it will not affect our daily needs. That means our daily needs. That means we need to pay our rental. We need to pay our, let's say for example, if you are still studying as a student, we need to pay our tuition fee. Or if you are, let's say for example, you have a business, we need to set up aside for business costs. So just to make sure that this risk capital will not affect your normal lifestyle or your desired lifestyle. And we know your limit and when to walk away once you hit this maximum risk capital. Beyond that, if you continue to trade and we engage into revenge trading, this is where your lifestyle will get impacted. And this is where you start to get all this emotional disorientation starts to come into play and it will start to affect your emotional well-being. All right. Then next particular set is setting goals. So in order to become a successful trader, we need to have this high performance trading, or we call it goals reflection loop. So what this goals reflection loop I'm talking about is setting up goals that are easy, but achieving goals is a real challenge. All right. So achieving goals is like a process. Yeah, I can set up goals, but how do I want to achieve it? There must be a loop, because setting up goals without achieving it is not a loop. Okay, it's not a loop, but it's actually, in fact, it's a this loop. Okay, so in order to actually keep it looping, I will share with you what this trade model to identify your goals and plan their implementation. Okay, that means this loop is you set, you measure it, you reflect it, and you repeat it. So repeat, that means whether your earlier goals have been met. If not have been met, you repeat this whole process again. So it's like a loop. So if I will set goals are easy, but if I don't implement it well, I'm not able to achieve it. That's a real challenge. So to actually bridge this setting up goals and achieving it, I will share with you this trade model, how to bridge this gap together. All right. So basically, what is this trade to success model that I like to share with you all, that I use it in my usual trading or my normal days of trading is number one, I set myself a target. So what do you want to achieve? So you got to be specific of this target. Write it down when, where, and with whom. And how will you know when you have achieved it? Let's say, for example, I want to achieve a target of trading an instrument, let's say called dollar yen. And within 3 months, I want to have a gain of 300 pips. Okay, notice this how I write down this target. And the reason why is it achieve this goal important to you? Because I want to become a better trader, because I want to prove myself to have a better understanding of how to trade dollar yen successfully. Okay, this is one of the reasons. And action. What action will you take? What needs to happen? And are there any possible obstacles? Let's say, for example, in order to trade dollar yen, I need to have a platform that able for me to understand or to plot better technical analysis chart, and able for me to know at any point in time what is my reward risk ratio, and to know how do I calculate my trading capital, how much to risk. Okay, and do is to take action. That means, i.e., when do I want to start real dollar yen trading? I could actually start off with paper trading first. But bear in mind, paper trading using a demo account doesn't reflect reality. That means it doesn't take into account of your emotion once real money is into play. So you got to ask yourself, when do you want to start real trading, and when do you want to stop the demo trading, to step into reality? And also, how do you want to evaluate? When and how will you keep track of your progress? That means, i.e., you could actually start with a checklist. That means, for example, do you follow your trading system or your trading strategy to identify your trading setup, to take trades according to your trading setup, and also write it down on the journal. That could actually help you to evaluate your process. So I want to leave you all with this famous quote by Robert Kohler. Success is the sum of small efforts repeated day in and day out. All right. So with that, I end my module 12, and I hope to see you all in my next video. Thank you.